Hi, my name is Shirley for Talk of the Town. Today we're going to be talking about the tax changes for 2013. We're going to be covering a lot of information and tax credit. Stay tuned. Dwane, thank you for coming on and being a part of Talk of the Town.
Thank you for having me.
And we're going to be asking, or I'm going to be asking a lot of questions because you are a tax expert. And people would love to hear, and they really want to know now what changes has been made in 2012. So what is EIC?
Well, basically the EIC is the acronym for Earned Income Credit, and it's the max credit that you receive for the child that you're claiming in taxes.
What are some of the tax changes for 2012?
Well, the most significant changes that I can luckily say that didn't happen, Congress wanted the middle income taxpayer families to pay out their taxes in the month of March would delay the return. So luckily it didn't go through. So now they'll be receiving their return around the 30th, which is the same as last year. So that's one of the changes that I can say that didn't happen. And I'm glad it didn't happen.
Now, I've heard so many times people say that you can claim so many children. How many children can you claim, a single parent claim?
Well, you only get credit for 3 kids for the earned income credit, but you can claim 3 or more children. You can still get the tax credit for that child. You can also get the child care expenses for that child. So you can claim more than 3 kids.
So a person
there's really no limit.
So they can claim 5 children?
Yes, ma'am.
Okay. Now, if I didn't work last year, will I still be able to file my taxes?
Technically, if you didn't pay out no federal withheld to the IRS, they're not entitled to give you a refund. But if you did anything on the side, self-employment, you can still file your taxes. And
what are the different status for filing the taxes this year?
Okay, there's 4. There's head of household, that's basically a filer with a dependent. There's single, that's a filer without a dependent. And there's married filing separately and married filing jointly.
Can someone claim a child that is not biologically theirs?
If that dependent or child has been living with that taxpayer for over 6 months, then they can biologically claim that child.
So what about if you have a child in college and your child is 24? Can you claim your child?
They're right at the limit right there, 24. Then between 19 and 24, you can get the AOC credit or the American Opportunity Credit, and you can still claim that child.
Now, with American Opportunity Credit, can you explain that to our audience?
Well, basically, if a child is a full-time student in college and they're paying tuition, they can retrieve that credit from the IRS.
So, if someone is making payments, and this, I'm sure you hear this quite a lot in your office, they're making payments, they're in defaultment, will they be able to get their taxes?
It all depends on how much they owe. If they're making payments, or if they owe the IRS will take out the money that they owe that taxpayer, and then they'll get the refund back, the difference.
So if once they take out the money, or they garnish them, or how does that normally work? When they garnish them, they garnish their
they'll take it directly out of their check. And the difference that they took out, that's the check you'll be receiving. Or if they still owe some more money, they'll send you the bill that you still owe for the next year's tax.
Does that still apply for child support?
Oh yes, man, that definitely applies for child support.
So if someone owes child support and they come in and they tell you that goes directly to their account, or how does that work?
For child support? Oh, it goes directly to their account. I mean, if they owe child support, it's going to go that's going to IRS.
Okay. So what if a person, can they file Social Security on their income tax?
Can they file Social Security? If they didn't pay any federal withheld on that Social Security, then they cannot file it. I mean, unless they're doing something else on the side, they can file their taxes, but if they just have the Social Security income, which is called a 1099-G, they cannot file it.
Now, what if a person is going to sell their home? How does that work?
Well, basically, when they sell their home, they will get a 1098 form from their real estate and they sell it from, and then they'll put it on a Schedule D form. and that's capital gains and losses. So that's how they'll get that credit for that.
So, so once they put it on the capital gain and losses, they will be able to, say for instance, they lived in that home for 6 months, they will be able to get the monies that they put into the home?
They'll get partial credit, but they want to get the full credit on next year's taxes. It'll take them up to 3 years to get the full credit.
How do I report, or how would someone report unemployment income taxes, or income on their taxes?
Unemployment, you won't really get much of a credit for unemployment, seeing that they're not paying taxes on unemployment, because that's actually money the government is giving their taxpayer. So they won't really receive that much credit for unemployment wage.
They would have to report that?
9 times out of 10, it depends on how much you're getting. If you're making under $6 grand or so, you really don't have to report it. But if you're making more than that, the government requires you to report it.
Okay. What is the age limit for claiming your child on your taxes?
The age limit? There's really not an age limit. Basically, a taxpayer or the dependent will have to go through a dependency test. If that person, dependent, has been living with that taxpayer for 12 months, then they can be claimed. There's really not much of an age limit. Like I said, you can claim your mother if she's on disability and they receive those paperwork. Then, as long as you can prove that that mother's been staying with you or been living with you, then you can claim. There's really not an age limit.
So have you seen, you know, and I'm sure you talk to people and they said that, say for instance, John Doe has been living with them for 6 months and they can claim that person?
Yes, ma'am.
Okay. What if the person isn't working or don't have any income coming in? Can they claim that person if they were homeless? Let's say for instance if that person was homeless.
If that person was homeless and they're trying to claim another person? No, ma'am.
After I have filed electronically, how long would it take for me to get my refund back?
Well, the IRS hasn't given us a date back how long it would take, but they're projecting anywhere between 7 and 21 days. So I would say anywhere between maybe the middle of February. Last year was going through. Last year we had a lot of problems with a lot of our taxpayers because the IRS was taking maybe 3 to 4 weeks for them to get their money back. But that's because they were taking an extra look at their taxes because they're going through a different system or software. So it may take a little longer, but this year they're saying anywhere between 7 and 21 days, sir.
What are some of the red flags that would actually hold up the refund?
That's a good question. False income, that's a red flag. A lot of times you'll have taxpayers bringing in another income that they can't yet I want to say prove it. Claiming other dependents that's not theirs, that's another red flag. Not reporting some income that they may have, that's another red flag that may you basically allow the IRS to take a second look at your return. So
once they have the red flag, then it'll be in a pending status, or what type of status?
Basically, it's pending. That means they're looking at it. They're using other or their agents to look at your return, stuff of that nature. Once that happens, you can go to the IRS.gov and it'll say type in all your information. It'll say where's my refund, and you get everything you need to know right now.
And once that person does that, then they release their funds.
Yes, ma'am. They release it into your account, or they get right out a check for you.
What are some of the things that you think that the consumer, should I say, need to hear for this tax season?
Basically, if you want to maximize your refund, you bring out all your taxable information, taxable income that you may have to your tax preparer. If you're doing hair, I know you do that well, Miss Shirley. You bring in all your receipts and your logbooks. If your child is in daycare, you bring in all that information as well. Bring anything you have in order to maximize your refund to help you prepare for that. That's what I can say.
Now, let me ask you something. And when I go to file my taxes, I'll ask for the person that's experienced in business.
Right.
Because one thing that I found out, that there's some experts that aren't experienced in filing business taxes. As a business owner, do you need to ask that question, or?
That's definitely a question you need to ask. Definitely, because I mean, when you're filing for a business, when you're filing self-employment, that's 2 different types of taxes. So that's definitely a question you need to ask your tax preparer, because you might have to pay out As on the business, you want to pay out. And if you're filing self-employment, you want to receive a refund. So that's definitely a question you need to ask.
So once you talk to the person and you ask them if they're qualified to file the business taxes, then will they tell you all of the new tax perks for the year, or should you go online to look up the information? How does that normally work?
I mean, it all depends who you're dealing with. Sometimes they're not going to tell you. Sometimes you got to get the information for yourself. You know what I mean? It depends on how you're dealing with it. Like if you're doing a Schedule C, that's basically an unemployment form. You're going to have to bring in all your receipts, your logbooks, everything you have in order to maximize your refund. Like, understand this, though, when you're doing a Schedule C, you're not entitled for the EIC credit, the earned income credit for those kids. So you have to let that taxpayer know in that situation.
So there's, if they file a Schedule C, that's totally different from the 1099?
Yes, ma'am.
Okay, so what's the difference with what's the 1099? How does that work?
Oh, there's different 1099. There's 1099 miscellaneous. That's basically an expense that a business may pay out to you. There's 1099R. That's a retirement. That's a retirement form. That's basically the retirement money that you're receiving and you file in your taxes. There's all different type of forms that you can use.
So, for instance, if someone decided they wanted to take some money out of their retirement fund, do they need to report that, or how does that work?
It all depends how much you take out. I mean, if it's a significant amount, maybe 10 grand or more, then that's you report that. So they can put it on those forms for you, and maybe you get a refund back for that. If it's like 1,000 or less, then that's not really necessary to report. It all depends on how much you pull out with anything.
So, and once they give you that information, then you will actually key it in, and then they will take taxes out on there, or how does that work?
Yeah, well, basically we're going to put it in a different form. We're going to enter all the information that we receive from you, and then we're going to key it into our system. Key into the prepared system, and then the refund, we'll send it to IRS, and then they calculate it up and we'll get your refund.
Okay. Now, what if both parents claim, and I'm sure you've seen this at one time or another, both parents claimed a child? How does that work? Is that a red flag with the IRS?
That's a funny case. I ran into that problem a lot last year where the baby mama would try to beat the baby daddy to the tax, or the baby daddy would try to beat the baby mama to the tax. So I seen that a lot last year.
Yeah.
Well, who's entitled to claim that child is the person, the child, whoever the child been staying with for 6 or more months throughout that year, they're entitled to claim that child. If they're both split 6 months, then it's a tiebreaker rule, and they split a year. So if this year the mother claimed that child, the next year the father has to claim that child. So I mean, I ran into that situation a lot. A lot of times the person will call the IRS and try to stop it, but I mean, once it's been done, they can't do it because that's their biological parent. See what I'm saying? So I've seen that a lot. I mean, that's one of the most common problems that you run into. Like I say, but I mean, how you avoid that is getting legal documentation of when you have visitation with your child, and when you claim them for last year. That's how you avoid that, getting into legal issues.
So they would have to provide you with all of that information when they actually come and file their taxes?
Yes, ma'am. Yes, ma'am.
Okay. If a person sold their home, what would they have to do as far as reporting the taxes on there? Say, for instance, if they sold their home 6 months, they were in their home for 6 months, can they still get credit for that?
They can get credit for it when they sell their home. They'll get a form called a 1098-S from a real estate agent, and they'll put them on a different form called a Schedule D, a Schedule D form. And once you put them on that form, basically you'll start accumulating taxes from that house. So you can get some taxes from selling your home, but it depends on how you tell your taxpayer. You got to explain everything to your taxpayer. Your taxpayer has to be a very professional in that situation to understand though. Okay.
What if, I'm sure you've ran into this also, you had people to come in, the baby was born December 31st. Can they still file that child?
They can't, they can't file that child, but technically it's not 6 months, but they will get partial credit for it. So you have to understand the situation. You only be taking care of the kid for like 2 or 3 months. So they'll get partial credit for them. So yeah, they can still file them.
They still, that's good to know. What if you, as a business owner, and you have multiple people that work in your business, and you're actually writing out tax form for them, you're giving them a W-2 form. When they come to you, how would you actually calculate that?
That's going to be a part of the Schedule D, capital gains and losses you're writing out, all those W-2 that you're writing out. So that's going to be a part of that for the business form, the Schedule D form.
When a person goes, say for instance, I take some clients out to McDonald's, let's use McDonald's for instance, can I claim all of the meetings that, like when we go out to eat?
Yeah, that's the work-related expense. So if you keep all of the receipts, you can claim all. You can claim if you're using gas for work-related expense, if you're using uniform for work-related expense, if you're buying a pen for work-related expense, you're buying printers for work-related expense, you can claim all those on your taxes. And you keep all the receipts and they calculate it up, and it's a form we use in our software that you put it into the system, and then you get money back for that.
And so if someone is in college, if they're going to college, is there any income credit that they can use for college, for education?
Yeah, it's called the American Opportunity Credit. Basically, if you're in college, if you're a full-time student in college and you're in the age of 19 and 24, I use that a lot on a lot of schools. We had a school across the street from me that taught hairstylists and hairdressers, so I use that a lot over there. So if you're between the ages of 19 and 24, you can receive that credit. And the max credit you get for that is about $1,000 for just for being in school, which is, if you're in school, that's a lot.
So what if I decide to go back to school? I mean, can I get some credit?
You do look about 24, so I mean, maybe you could. So, but yeah, you got to be between 19 and 24.
Because there's a lot of people now that's coming out of their home. Mothers now, they're going back to school. You know, they're taking classes, college classes. So you know, if they're in school full time, isn't there? I mean, shouldn't there be some type of way that they can get that?
That's tough. Like it's tough. I mean, it depends on the form they use, but they got to be between 19 and 24 to get a full AOC credit. Like it's just tough.
Okay. What if a child is not biologically theirs? Say, for instance, I had some godchildren that came to live with me for 6 months, 7 months, you know, throughout the year. And I don't have their Social Security, you know, number, but I have all of the rest of their information. How can I claim that child?
Well, if you don't have the Social Security number, then you really can't claim it. That means that the parent can't enter the information to the system, so there's got to be a way to get it social. So, if that person, that child that's not biologically yours, lives with you for over 6 months, then you can't claim them. If you have any mail coming from going to the house in pertaining to that child, daycare expenses in pertaining to that child, you can bring that to your tax preparer. But like I said, there's no way you'll be able to claim that child if you don't have that Social Security number.
Now, I'm sure you've heard a lot of people say that their unemployment, they come in, can they file their unemployment?
Like I said, if they're not paying out federal withheld, there's no way they really can file unemployment. Because unemployment is basically money that the government is giving you. So they want to receive a refund for unemployment unless they're doing something else on the side. Then that's another form that you use.
Okay. Can a person file? Can a person file child care expenses?
Yes, ma'am. They sure can. As long as they receive those. In fact, at daycare, at the end of the year, they give you it's a form they give you that tells you how much you paid out throughout the year. And once you get those forms, you give it to your tax preparer, and you're receiving a child care expense just for having your child in daycare.
What if the daycare doesn't give you a form, but you've paid, you know, the person has written checks? Can they use that as a form
You sure can. So once if you bring out checks, which is a smart thing to do, so you can calculate all those expenses, you bring it to your tax preparer, and he'll calculate it for you, and then you enter it in the system, and write to the IRS, and they'll calculate it up for you.
You mentioned 1099-R, but what is 1099 miscellaneous?
Basically, it's an income, a business expense. Like, that's for instance, you pay one of your cameramen or one of your contractor fee. So when you pay them $800, it's another form that you will put on that you will give to your taxpayer, and they'll let them know that you got the $800 and you get a tax off of that. It's just a miscellaneous income that you got from a business, basically.
And the 1099-R is, what is that again?
It's retirement, basically when once you retire, you get checks every month. So the 1099-R is the amount you receive and the amount you're paying out, your deductible from your federal withheld.
Now, someone is getting Social Security. Do they report that on their taxes?
I ran into that a lot last year. I found a few that was on Social Security, but if they're not really making money another way or have some source of income coming from another direction, it's really not going to get you back a lot of money, but you can file it. Like I said, I mean, $400, $500, that's money. But a lot of times, you want to file Social Security because you weren't really getting money. You're not paying out a federal withheld. You're not paying the government anything. It's money the government's giving you. So really, they're not entitled to pay you back any money.
If someone is on Social Security and they're working a part-time job, will they have to file taxes?
If there's someone on Social Security and they're working part-time, we have to file taxes. Yes, ma'am, they should.
Dwane, what are some of the craziest experiences that you have encountered as a tax preparer?
Yeah, I can remember one of our clients that came in. It was someone I spoke to personally. She was so happy with the experience. She came in. She came in to did her taxes. Everything was good. Signed the paperwork. Was happy. Couldn't wait to get her money back. She went home. I don't know what happened from her leaving the office and going home. But she came back up and she was outraged. She came up there. I mean, the whole lobby area was full. I'm talking about full. It's about, I want to say about 10 people. 10 people in the lobby. Then we had three people each desk. So the office was full. She came in outraged. Why y'all charge me this? And she picked up the printer, threw the printer. She threw the printer. And she kicking trash cans. Her friend had a comment that I feel like she was on drugs or something wrong. Anyway, so when the period that did the taxes got up and swung on her.
No.
Yes. I mean, so and then all we know is that there was a fight. So I'm in the middle trying to break it up. I'm getting swung on. I'm getting hit in my head. It was a mess. I was talking about the clients that ran out the office. We probably lost about $20,000 that day. The clients that ran out the office, and we had to call the police. That's like one of the craziest stories. That's one of the craziest experiences I've had since I've been in office. Like, I don't know what happened from the time she left the office and she went home, because she was just happy as can be. Oh, I'm getting $6,000 back, and and she went home, and then I don't know what happened when she came back and just like a completely different person. That's like one of the craziest experiences I can say that ever happened.
Now, after that, what did you do? What was your thoughts in this?
Well, my thoughts, I had to go outside and take a break. I needed to breathe after that because I got hit in the head about 2 or 3 times. My nose hurting, my chin was hurting. I needed to breathe after that one. But after that one, though, it's like, be more aware of that. Make sure the customer understand what they're being charged, what forms we're doing. I make sure the customer understands before they leave, though, because we don't want to leave any customers out here. That's why I got out of that whole situation.
And so, what did the people say as far as the other people that work with you? They were a little nervous afterwards. Did you close your office down?
Yeah, we had to call the police. The police came. We had to run a police report. We was there about an hour. So after that, all that happened, we closed the office down for a little bit, just to take a break, because that was kind of big at that time. Because that normally doesn't happen. But I mean, it was a situation that happened. I mean, it was handled the best way it could be handled, in my opinion, because she came in threatening the office, threatening the preparers, threatening everybody in there, threatening the clients, and threatening the business. So I mean, it was handled the best way it could have been. But after that situation, yeah, I learned a lot. You know what I mean? As far as how to handle certain clients. You know what I mean? So, because a lot of times you got to learn how to de-escalate situations. And I feel like that situation wasn't de-escalated as best as it could, being that we were so busy at the time. You know what I'm saying? So, yeah, I learned that was one of the craziest experiences.
Dwane, what would you like to tell our viewing audience now when they go in to prepare for their taxes? What are some of the things that you would share with them that they need to look for?
Well, basically, I just want to touch up on be more aware of what you can get back on your return this year. Make sure you bring in all your forms, all the taxable income that you may have to maximize your refund. Like I say, because a lot of times this year people really filed for the EIC credit. That's like most, that's how you get the majority of your money, the earned income credit. I mean, anybody between 13, making 13 to $49,000 is entitled to that credit. And that's almost $6,000 for 3 kids, just for 3 kids alone. So I mean, be more aware of what money you can get back, how to maximize your refund. That's all. I mean, that's all I can really say right now.
Well, thank you, Dwane, for being a part of Talk of the Town and coming on and sharing with us and the viewing audience on what we need to do for 2013.
I really appreciate you for having me, Miss Shirley. Thank you.
Thank you for tuning in and watching again, Talk of the Town. And remember, it's not gossip, but words with a purpose.
Talk.